Snap Inc., the company behind the social media and augmented reality tech company Snapchat, just reported earnings, and I looked into it, so you don't have to. All right, so let's look into the earnings. Look what happens. First of all, Snap reported the earnings after the close of the market in the US. So we saw some after-hour trading action, and we see it here. It went down pretty steep. So they reported, and then we had a 17% drop in the price of the stock. So yeah, the market didn't like what they saw. They didn't like what Snap reported, and let's try to find out what it was. Yeah, if we look at the longer trend of the company with these declines, so we see that it really trended down here to a low. 52-week low is 7.8, and yeah, with this drop, which we're probably gonna see tomorrow morning, unless we have a steep reversal in the general market. But yeah, we're gonna touch close to this one, so we will be close to the 25-week low of 7 something for a company. So this kind of indicates that the company is very much in crisis and very much on a downward trajectory. And yeah, let's take a look at it if the numbers that they reported actually tell the same story. And yeah, to do that, we're going to look into the investor results. So first on their homepage, we see, they reported 460 million daily active users, which I think is an impressive number. And very important, and the number they also very much like to highlight, the 9 million total users, so 900 million, excuse me. So they're really closing in on 1 billion users, which would be a crazy good milestone to have. Over 300 million users that actually use augmented reality, which is impressive. Creators use their studio, 400,000. And really big market share in the Gen Z age group, 13 to 34. So this is really a Gen Z company. You can watch my previous video on the subject where I kind of laid out the broader investment case for Snap, but we talked about that it's really a Gen Z company, and if you're investing in this company, you're really investing into it not because it's making money now, but because it's building a strong relationship with Gen Z, who will have their peak earnings potential in the years to come, and not right now. So let's jump into the actual investor presentation that they released and see what the numbers tell us here. So yeah, let's first of all just have a look at the highlights that they reported. So if we look at this, companies, what they always do is they like to pick what is best for them. So if the numbers year over year look good, they emphasize year over year. If the quarter over quarter looks good, they emphasize quarter over quarter. So here we're gonna read through a couple of very good results, but they all are year over year. So yeah, we have a revenue increasing to more than 1.3 billion to so increase to 1.3 billion from 1.1 billion. It's a 14% year over year increase. Keep that in mind, year over year, not quarter over quarter. Average revenue per users, $2.96 US dollars compared to $2.83 dollars, which is also good. Margin increased by 1%. Always very important. That means they just make more money per unit sold, so that's very good. Gross margin stayed also increased by 1 point. Net loss, so yeah, it's a technology company still investing in the future, and yeah, the net loss decreased very, very significantly to 140 million compared to 305 million. So yeah, that sounds really good. EBITDA increased to 108 million compared to 46 million the previous year. And then net loss, so as margin was 10% compared to 26 years over the in the previous year. And yeah, cash flow increased, operating cash flow and free cash flow increased year over year. So operating cash flow, really much the cash they generated from the business operations, and the free cash flow after we deduct financial metrics like interest payments and stuff like that. So yeah, free cash flow, pretty good, pretty nice, and very well increases. So yeah, as I said, of course, it's their presentation. They're highlighting the good numbers. Let's look into the numbers, more details, step by step, to see what this actually means. So, first of all, let's take a look at some of the business highlights that they mentioned. So yeah, as similar to what I said, they're proud of these 900 million users around the world, which is very impressive. And for me, it's also, I think, the most important thing. So if I look at this company, I'm not so much looking at, did they make 1 million more this year, or did they increase earnings by 1% or free cash flow by 1%? Not really. I mean, of course, it's a business, so it shouldn't be losing too much money in that department. But for me, the most important thing is the app still popular with their target audience, and are they increasing market share? And they do. They're adding users. And as I said, they're coming closer to those 1 billion users. That's pretty good. And daily active users also increasing year over year. And then they're just highlighting, their creator program with the spots increased by more than 125%. So that's a good thing to showcase. And the posts that are recent are very good in the last 24 hours, so that's good. And the AI is very popular with 55% year over year. So I don't know, I invite you to dive into that. It's pretty funny, like Gen Z and the Snapchat AI. So they're really relying on that. They're using it for everyday tasks, like where you kind of shake your head and like, what is going on here? So they're using it to break up with their girlfriends, or to like tell you what is 1 + 1. So yeah, but it's very popular, and it's one of the, I mean, all the companies are working with AI currently, and I think Snap is actually one of the companies that managed to really increase it into their core functionalities in a way that really makes sense and really provides value for its users. So I think that's a very good use case. And yeah, then they have some business metrics, and they roll out some new advertisements projects, which I think is good. But I prefer more those user-focused metrics on this part. So as I said, if I would be looking at Meta or Facebook, I would really like them to focus on this stuff, like new programs to improve advertisers, new programs to make it easier for advertisers, showing that you increased advertising revenue. But actually for Snap, I really prefer to see like, okay, are they building new cool AI, new cool augmented reality? Are they engaging new users? That's what I'm looking. And yeah, that's what we're seeing. So on this business perspective, it still looks pretty good. So yeah, similar here, augmented reality, they improved new augmented reality platforms. They have some new experiences out there, new mini games. And so it's exciting stuff going on there, and I think that's very important to see, like, that they're still rolling out new features there. So let's go more into the numbers. So as I said, daily active users. Globally, we see an increase year over year, 9%. And here we even see, and that's for me very, very important, we see quarter over quarter increase. So that's very, very good. Steady increase of users. And yeah, we see North America 1% decline, but the rest of the world really makes it up 16%. So yeah, Snap is really, really popular in the Asia Pacific region, ex China. So yeah, rest of the world really becoming more important for Snap. So we even see, like, in millions, more users in the rest of the world than in the US. So North America is not the most important market for them. And average revenue per user. So here it becomes a little bit more nuanced. So here we see, of course, again, year over year, we have a gain, but the thing is the quarter over quarter. And here we see it's a little bit alarming. So yeah, we see that the revenue is per user is lower than the last 2 quarters. And yeah, that's not good. I mean, fourth quarter, of course, it's always tricky to compare the first quarter with the fourth quarter, because fourth quarter, of course, like for a business like Snap that focuses on ad revenue, fourth quarter, Christmas, end of the year sale, that's where all the businesses increase ad spending. So yeah, that's hard to compete with the fourth quarter, but the third quarter, I think that's a little bit more alarming, especially we're not looking at total revenue, but we're looking at revenue per user. So yeah, that's not good to see that compared to the third quarter that they actually had a decline here. And again, we see that the rest of the world is actually really where Snap is shining. So at the rest of the world, they earned more per user than they did in the third quarter, so that's good. But of course, we also see the reality that, of course, North America is the most important market. So here we have earnings of up to almost 10%, $10 per user, while the rest of the world, like Asia, is just close to $1. So yeah, US market remains very important. Gross margin, year over year, 1% increase, but again, really not as good if you compare it to the previous quarters. So with a margin of 53%, we're back to Q2 of 2024. So yeah, that's not too good to see. The fourth quarter, pretty good, a margin of 57%. So how profitable were they actually on their actually product implementation? Yeah, here a little bit more the nuanced breakdown. So we see that infrastructure costs, yeah, year over year increased. So it's looking at the adjusted costs. That's always good. Like that's what we want from a tech company, to scale, and at some point actually be able to yeah, keep the infrastructure costs at the same level while increasing revenue. And yeah, we're close to that. So infrastructure costs not increasing significantly. Content costs and partner costs, yeah, pretty much also staying the same. Excuse me, that's advertisement costs, and then content and development partner costs increasing year over year. So what are they paying out to creators? But also decreasing quarter over quarter. So nothing alarming there. But of course, yeah, we would see that. I would like to see that advertising going down and infrastructure going down. Content, I'm okay with paying out more, because that would mean that they have more creators on the platform. And adjusted operating expense margin, I think, yeah, that's a technical measure by them, adjusted operating expense margin, which they define as GAAP revenue less adjusted operating expenses. So that's a little bit of an technical reporting metric that they include. So in Q4, included restructuring charges, stuff like that they put in there. Now this is more interesting. This is really interesting. So we're looking at the net income, and that could be a reason why we saw in the intro the stock price going down. So we have the actual in the fourth quarter, we actually saw the company historic moment. We saw it, turning profitable, reporting profitable net income. But now we're back to a 10% loss, 10% net income loss, and yeah, that's $140 million in loss in the first quarter. Yeah, that's not good to see. I mean, ideally we would have liked to see this going up. But yeah, as I said before, fourth quarter is the most profitable. Less loss than in the third quarter. So comparing it to the third quarter, and especially compared to the first quarter of last year. So Yeah, we're still seeing a positive trend, overall trend here, but yeah, something they need to work on to improve here. Yeah, that's and then net income per share. So how is a shareholder, that's interesting to you, how much income did they actually make per share, or in their case loss. So here it's similar thing. So yeah, income or the loss is reducing, and it was even profitable in the fourth quarter, and maybe it will increase, and this is a positive thing there. More interesting for me is here this metric, common shares outstanding. So a big problem with Snap, or a critique that a lot of analysts have, is that they're saying the company is diluting its shares too much. So they're handing out too much share compensation for employees and for investors. So yeah, important metric to have here. We see that the actual number of outstanding shares decreased compared to the fourth quarter. So that's great to see as an investor. Great to see as an investor. So the first time that they're really decreasing here their shares, and we really want this. I mean, of course, now we've seen it in Q1 24 as well, but yeah, that's really a trend we want to see continue. They need to reduce the number of shares, or at least stop giving out so much to their employees. And yeah, a big part of it we see was a share repurchasing program here. I mean, yeah, that's always a question, share repurchasing. Yeah, does it really make sense for a company that has a lot of debt to repurchase its shares? I don't know. That's not something I'm going to hang my head, but yeah, definitely I would like to see them give out less shares to their employees. Okay, and free cash flow. Free cash flow also increased. So operating free cash flow versus the overall free cash flow. Operating free cash flow also just means how much from their operations, how much money did they generate, and then of course free cash flow minus the capital expenses. And yeah, we see same picture as before. So we see that free cash flow compared to the fourth quarter, of course, is lower. Over year, of course, is higher. Yeah, interesting to see. Q2 will be very interesting to see, because last Q2 they had a negative free cash flow. So that would be very interesting to see if they will be able to increase free cash flow in Q2. And then, of course, the debt. So debt, outstanding debt. So we see that they have this outstanding debt, which, yeah, big chunk of it coming up in 2023, which of course is a problem, and here in 2028. So that's really when they need to be making money, start to be making money in 2028. So it will be interesting to see. Yeah, let's look a little bit more at the figures. Yeah, revenue on the quarter. So revenue we see is up compared to Q3. Of course, it's down to Q4. Operating expenses are up compared to Q4, and that's not good. So I would like them to decrease the operating expenses. Justice research and development expenses. So also here we see, but I like that. I mean, I like them to spend money on innovative solutions. Ideally, we would not like to increase that too much, but that's something I can live with. Sales and marketing expenses, yeah, it's pretty much in average if you look at the last quarters, an increase from the fourth quarter, interestingly. But yeah, also something we would like to not increase too much if we could help it. General administrative expenses also increased. So EBITDA, earnings before interest, taxes, dilutions, and amortizations. Yeah, that's pretty rough if we look at that compared to the fourth quarter. So this was pretty ugly. Less than half of what they earned in the fourth quarter, and even less what they earned in the third quarter. So yeah, it's pretty much year over year. Of course, we have a good gain, but really, let's keep an eye on that. similar free cash flow. We looked at it before. And yeah, so here you have it. Snap. We went through the Q1 results. We saw that, one thing I want to mention is a big reason why. So the news financial media reported why we saw this big drop is because they didn't give any guidance. They say, so usually when a company reports earnings, they give for the next couple of months, they say, okay, we expect to make this much money. And they're saying like, oh, we cannot report guidance right now because of the geopolitical uncertainty. That's what they said. Which, I don't know. I mean, it's kind of an excuse in my opinion. Of course, it's hard to model everything. You don't know what will be the tariff rules and everything. But first of all, this is a company that makes software, so a little bit less affected compared to like companies that trade in durable goods. And a little bit of a cop-out. So that's the financial media said this is a big result. I think it's also because another reason for the drop is that the debt increased and the earnings and the revenue and the free cash flow compared to Q4 decreased. Yeah, so these are the reasons for the drop. But I mean, does it really warrant a 25-week low for a company that's still really putting out exciting new features, and a company that's still managing to increase its user base for this crucial Gen Z target audience? In my opinion, not. But of course, make up your own opinion. I think we will see this company moving back up. So it's really fluctuating in the recent months. So I don't know if you're a trader, this is a really good company to trade on. So we saw a drop, 50%. So then it went back up, 30%, back down, 10%, back up, almost 30%. And then down another 50% and back up 30%. So yeah, if you're a trader, this is a dream company. I don't know. I like to not too much trade on it on a day-to-day basis. But yeah, this company is really swinging big here. Make up your own mind and let me know what you think, if Snap is a good investment case or not. And see you in the next video.